think we are live. All right, welcome everybody. This is Jeff Scott, and welcome to the next installment of my weekend review. Seen a lot of people have been coming into the YouTube site as well as downloading it from highgrowstockinvestor.com. If I say I'm going to upload a file, it'll be uploaded to that website, and haven't figured out how to upload files to YouTube yet, just the movies, but not text files or anything else. This will be a similar format to what I've done the last several weeks. Disclaimer, educational purposes only. Anything I recommend is in the spirit of education and not investment advice. I'm a doctor, not a broker. Keep in mind most physicians lose money with their investments, and I'm not affiliated with any software vendor or trading company. So I'm going to talk about a lot of tools. You'll see I've got quite emotional about some of them. But what I can tell you is anything that I talk about I actually pay for and I use anyways. So if I show you my desktop at any one point, you're going to see a lot of programs, and this is not even my busy desktop. This is a machine I use just for the webinars because of the resolution. I need a real-time trading platform, and I use both TradeStation or thinkorswim. I could use one or the other. My problem is I've got a lot of custom indicators in TradeStation, and even though I'd rather move to thinkorswim for everything else, until I get those reprogrammed or fund that, I'll be staying with both. For analysis, I use High Growth Stock Investor, which I'll be using for most of this program. I use EdgeRater and ETF Bandit. I'll talk about EdgeRater today. I like doing seasonal analysis. I may look at Magenta Trader. And then my gurus, the ones that I like to follow mostly, are Ian Woodward and Ron Brown. And I'll mention several things about them. Ian has a free blog. Ron has free daily market updates. Excuse me, a free weekend review. And Ron has a product where he sells a daily market updates, and they sell a newsletter together. So as I go forward, one thing that I learned from Ian and why I like Ian so much as a teacher is his comments of, he likes to tell everybody he's not a guru and to be your own guru. He's a guru, but I'll just leave it at that. This is Ian on the left. Here's Ron on the right. These are two of my bigger influences. Other influences that you may see pop out in some of my discussions are Alexander Elder, a series of awesome books. A little bit about the psychology of trading, but they're just really great books to read. William O'Neill, How to Make Money in Stocks. Gil Morales, Chris Katcher, Trade Like an O'Neill Disciple. These are the guys that brought us pocket pivots. A lot of interest in institutional volume, position sizing with Van Tharp, candlesticks with Stephen Bigelow, and then Ronald Grunke has a great approach to writing calls and making money on your stocks by renting them. So basically, this is the folks that I have learned from. I've read a lot. I've read others as well, but these are the ones that I keep going back to. One of the things that I do that is probably a mistake is I say buy list, buy list, buy list. These are not things that I'm going to necessarily buy on Monday. I have no idea what the market will look like Monday morning. So one thing that I'm a big believer is that the market will dictate the majority of the performance of a stock or a list. So a rising tide raises all ships. If it's a very powerful, strong market going up, then I know that I will be long. But if the market has horrible futures in the morning and opens down, I'm certainly not buying anything. In addition, I can't tell you what news is going to come out between now and then on any of my key holdings. So if the market is pointing up and the sectors are pointing up that I'm interested in, and then a stock has the wind behind its back, then that's when my buy list becomes a setup, and then I potentially buy it. So really what I'm going to try and do is I'm going to try and find a list of stocks that I might want to jump into if the market goes the way that I'm thinking. And then I also, during my trading, use multiple time frames, and I have my own specific triggers, and much of this is automated because I still have a day job. This is my typical agenda. I like to talk about where I think the market is, find some stocks through top-down investing techniques, perhaps mention some of the shortcuts, and as time allows, integrate it with other programs. Again, Ian and Ron are outstanding teachers and great students of investing, and certainly have a lot of things that they have taught me and have a lot to teach others. If you've never seen them live, this may be the last opportunity. That's the rumor out there. This will be the last meeting. If you go to www.highgrowstock.com and go into products and seminars. You can read about this and potentially register. It's $1,250. It'll be the best 3 days of investment education you'll ever have, and you'll wish you could come back for more, but I'm not sure that there will be more. The website, again, I'm not an employee, I'm not an owner, I'm just a user. HighGrowthStock.com, the free weekend reports I mentioned, which are very similar to what I'm doing today, and a shorter version. The URL's here, and then if you haven't tried the software, they give you a free trial, including the data feed. I always go to these next two slides before I go into the market analysis because I think it really matters where you are. This is a fractal pattern. By that I mean it's repeated in multiple different time frames, but it's really important helping me understand where this market is and whether or not I want to be long or short. You know, we're back here again as far as I'm concerned, where I think that this market wants to sell off, but the Fed, the QE3 won't let it happen. So what happens every time we get here and it looks like we got a sell-off, the market takes off. So at any best, I'd say we're in uncertainty, which makes it difficult for me to project until I see what the market's doing, the futures are doing, of what I'm going to do on Monday. And I put this up here because I wish I would have seen this 1,000 times when I was a lot younger, and that is in an uptrend, I want to buy pullbacks or retracements here. You know where to set your stops right below where it turns, but it really doesn't matter where I bought it in an uptrend. Long is good. Trend is your friend. In a downtrend, where do you buy long? Well, you'd have to buy here and run it up for the retracement. Very tough to make money doing that. So the message there is you don't go long in a downtrend. And in fact, you use these retracements to short. This is the typical darkest box pattern, and you want to buy on support and sell at resistance until it breaks above or below. So at this point, this last thing is on the High Growth Stock Investor website. There are a large number of webinars that I've done and others have done that can help you and help you understand what we're talking about today. This will not be a beginner's level webinar. I'm going to assume you know these indicators as I go forward. Party message, be your own guru. Investing is a business. Make sure you have the right employees, tools, and software. Continuing education matters, so reading and going to meetings. And always trade the market you get, not the one you think you should have. So I'm going to talk about the one I think I should have, but I'm going to make my decisions come Monday in this week based on what I have. So what I do first is I try and understand what is the market doing. So I look at a number of different things. And this is my TradeStation screen. And if I go into my futures, it's Sunday, so I'm not going to pay attention to the futures yet. But I like to look at the screen. This is the S&P 500s on a weekly. It's a commitment of traders report. And just assume that the yellow bars are people like us, the individual investors, that the blue bars are the professional hedge funds. And if you look at what happened going into the fall of the market in 2008, the individuals were buying while the hedge funds were shorting. As the market dropped and hit bottom, the hedge funds started buying and the individuals shifted to selling. So the hedge funds are the smart money. The yellow is probably the not so smart money. And I like to look at right now what is the market telling me. So if we just take a look here, we see that for the first time in a long time, pumps this up here, you now have got 2 weeks in a row where the smart money, the hedge funds, have actually flipped long. So you still got the less and less, perhaps, of the individual investors are long, but now you've got clearly a 2 weeks in a row where the hedge funds have gone long. Well, that would be a positive sign for the market, I guess, if you believe that these folks know anything because they're professional. I'm not always sure that I think they do know anything, but thought I'd take a look at that first. Then I'm going to look at some of the major indices, and then I'm going to look at EdgeRater. These are the different things that I do in taking a look at the market. So let's go into HGSI. Let's go down to user groups, and let's go down to the major markets plus. Oops. Go to the view of top-down analysis, which is giving me a short and intermediate term technical only view and showing where the strength is. And you can see in these 20 indices that represent much of the market You can see the strength last week has been in gold, and if you own things like Allied Nevada, you know what I'm talking about. There's been some big move in a number of gold stocks. The NASDAQ and small caps, NYSE, which is broad-based. What's not performing are transports, the dollar, and the larger stocks. So still the smaller stocks were ahead, at least on Friday. Let's take a look at some of these. Here's the gold. For those who have been here before, I will apologize. I'm just going to go very quickly to what you're going to see on the screen here. On the top, you are seeing some ribbons, and these ribbons are momentum indicators in accumulation distribution. So the top two are the bongos. This is accumulation distribution. These are elder force. Skip the one there that I've hidden from you, and then this is what I call the high jump, which I learned from Ian Woodward. Basically, the bongos are a momentum indicator. I'm looking for the short term, the daily, to go red, while the long term is green, and this is a pullback in the market, a time to jump in, perhaps. Similar on the elder, this is the long, this is the short, and when you get pullbacks, you typically see the short term go negative. The high jump measures the distance between price and the 17, which is in green, the 50 in blue, and the 200 in red, moving averages. It sums it up. And one thing that we've learned is when it peaks, it hits the highest that it's been, the market has a tendency to either go sideways or pull back. It doesn't always pull back, but it typically runs out of steam and goes sideways and lets the moving averages catch up. So you can see the high jump here on the gold has peaked here. So you're at a point where one might expect gold to pull back. Now, gold is highly news driven. It's had a huge run. In fact, if we just go from this point here, so open this up here, connect that, and we go, say, from this 50-day moving average up to where it closed on Friday, it's gone up 26 days, it's gone up nearly 11%. So that's a pretty big move, and you know that gold has been leading this most recent rally. It's going to go up if there's QE3 and further easing throughout the world. It can also go up in times of confusion and uncertainty in the marketplace. And it's pretty much going the opposite of the U.S. dollar, which, although it had a nice comeback on the end of last week, really has been in a downtrend now pretty substantially since July. I think part of what's propping up this market clearly is the fact that the dollar has done as poorly as it has. Let's take a look at the NASDAQ very quickly. What do I see here on this broad base, perhaps smaller in technology, and a lot of healthcare weighted index? You've seen a very nice up move. Now these blue things here are pocket pivots. I apologize for the dogs. I've got 3 dogs here with me today. You can see it had big volume on Friday, but we can toss that out because it was a quadruple witching, so there's a lot of extra volume of options expiration. And then the other thing that you'll notice here is that you have a red candle. It doesn't mean it was a down day. It means it opened up here and closed at the lower part of the day as it sold off later in the day. But clearly the NASDAQ does have a lot of strength and has been leading this market higher. My dog wants his toys. All right, there you go, bunch of toys. Sorry about that. All right, let's take a look at some of the other major indices. Let's take a look at the S&P 500. So you notice, again, on the NASDAQ, pulled back to the 17, running up, getting close to the high jump. You can see what happened up here when it peaked. It went sideways. Again, it doesn't have to go down. If we take a look at the NYSE, which is broad-based, also a lot of smaller stocks as well. Again, similar pattern. Let's get some more stocks in, some more dates in here. As you can see, a nice, well, I won't say steady move back up here, but clearly the trend is going up, and pocket pivot again on Friday. The pocket pivot's driven very much by the volume, and again, it was a quadruple witching hour. If we take a look at the S&P 500, bigger stocks, one sees, again, a fairly similar pattern. Certainly it pulled back, shooting star-like pattern on Friday. It'll be interesting to see where it opens. Notice no volumes on the S&P 500. So the markets continue a steady, slow trend upwards. High risk, I think, is certainly related to what's going on in the world. But this pattern here, this picture here, consistent with what we saw with the Commitment of Traders report, says the market looks like it may continue to want to go slowly higher. I am very suspect about this market, and I think there's a lot of risk here, but the charts tell me continue to expect perhaps the market to go up. I also like to look at EdgeRater, and one of the things we talked about last week were the buckets, and that if you take the Bollinger Band and you count the top is 100%, the bottom is 0%, and you divide it up into 10, then you could tell where a stock is by knowing what percent it is in the Bollinger Band, or percent B. And that you have 12 buckets because you have a bucket below and a bucket above. We talked about if you have a lot above, your tendency is to come back within the upper band and pull back. If you have a lot of stocks or your stock is below, to go up and pull back within the bands as well. 90% of the stock's movement will be within the bands. So whenever it's out of the band, odds are it's going to come back into the bands. So what EdgeRater does is take in each of those bands, the first 10, 20, 30 percentile, the below and above, and it's breaking every stock in the S&P 1500 into where they fall. So what do I see here is that 73% of the stocks are trading above the mid-band. And why is that important? Because in an uptrend, stocks have a tendency to go up by bouncing between the upper and the middle bands, and a downtrend between the middle band and the lower band. So if you have, say, 80% above the 0.5, that's considered to be very bullish. Obviously not 80%, but pretty close. The other thing I see is that most of the stocks are midway between the middle and the upper band. In fact, you have 16, 19, that's 35. Nearly 50% of the stocks are bouncing between, or actually if you include down here, a lot of stocks are bouncing in that upper part. Now, one of the things that I do like about this pattern is some of that overbought stuff that we had last week. And I'm going to take a look specifically at this column when I back it up to the 14th, has run down. Because as I mentioned last week, one of the things that was concerning was that we had over 40% of the stocks were trading above the upper Bollinger Band. And as you can see, we've worked that off. You see the 87%, you notice almost everything was trading at the top of the Bollinger Bands. And as the week went by, we certainly had a shift to the left and a lowering of the percent B, and then on Friday you can see it ended up at 73%. Still the majority of stocks above the 0.5, but some of that excess, perhaps optimism, has been eaten through the market. All right, we close that one down, and I'm going to pause this for a second, and I'll be right back. Sorry about that. My dog is being a total brat, and I had to give him every toy in the basket, not just a couple of them. All right, so I guess at this point I can say what I think about the market, which is there's some things I like about this market. I certainly like the commodities if the dollar stays weak, but the commodities, they've had a run. And gold if the dollar stays weak. But I'm concerned that this market has, as I said last week, I think it wants to go higher, but it's certainly not without risk. And we did burn off some of that excess optimism and some of that overbought as this week went. Now, I also like to look retrospectively as how the week went. And for that, I use what's called a group performance analysis. And what I've done is I've taken a number of lists of stocks that I like to follow, and I assumed I bought them on Monday, sold them on Friday, bought $5,000 of each one, and I've excluded HGSI indexes. And this gives me an idea of a couple of things. So the first thing I want to find is the S&P 500. S&P 500 was down 0.36. So as you know, it was sort of a boring market week. It didn't feel like much happened. My personal stocks that I had starting on Monday were down 0.19, and I show you that just because last week I showed you a big positive number in the week before. And like everybody else, you have good weeks and you have bad weeks. I like to know how HGSI type stocks did. HGS 100, so high growth stocks were not working this past week. We're down 1.43. And in fact, even the IBD 50 was down 1.34%. So most of the types of stocks that I like to buy were down for the week, or not much, not down much, but were somewhat down. And as I look at what things were doing well, relative strength, technical strength, top stocks, fundamental strength. So top acting stocks, the top Robert Bongo filters, one that I like, we'll talk about some, were doing well. Sprinters were a little bit above zero, but really kind of a boring week, frankly, and not a whole lot of movement on the things that I look at. So as part of top-down analysis, once I've taken my impression on the market, which again is lukewarm, I move into where is the movement going on in the industries. So I'm going to drop down to AAA industry groups, and I am going to, at least on the top-down analysis, you could see there's 142 groups. Now I want to know what's working the last couple of days, so I'm going to go to the force up number 1, and that 142 becomes 60. Now the last couple of weeks, I think there's about 100 there, so there's been some weakening in the market. And no shocker, after I did my bottoms up as well and looked at stocks, the strength in this market are in home builders, biotech, refiners. You can see several of them up here. So let's just take a look at some of the things that I saw that interested me. Now refiners are somewhere, I'm not sure they're going to be up on here. Let's see. Well, we'll find them later. I saw a lot of refiners looking like they were setting up to buy, but that was because they pulled back last week, so perhaps we won't see them here. Home building, clearly the leaders in this market, and there are a lot of them. The one I own is Toll Brothers, but you're going to see they all look similar, and they're all very extended. And we'll just go through a couple of them very quickly. KB Homes, and this is kind of a pattern that you're going to see over and over again. A nice up move for several months, big move on Friday. Again, this was expiration day, so I ignored the volume some, but boy, was there a ton of volume coming into the stock. Big up candle. Kahunas, enforced Kahunas, big momentum indicators, everything is green. If I bring some of my fundamental data here, this one doesn't have much in the way of going forward earnings, but certainly based upon this performance on Friday, was a leader of the group. Pulte, and there's a bunch that look like this one, a little bit more gradual, but big move up. Pulte doubling essentially since June. If you look at the high jump here, you're going to find this over and over again in these stocks and these leaders near the top. So multiple pocket pivots, everything green, big volume on Friday, probably pretty high risk of a pullback considering that it is at the top of its high jump. So be careful of this sector. Lennar looks a lot like Pulte, I bet. It does, perhaps not as extended as you could see, not quite up to the top on the high jump. Volume, pocket pivots, everything green, great earnings per share growth. Some of these looked very interesting as I looked at. You have to look at this and pick which one is your favorite. Again, not at the top, gap up, pocket pivot. This is Meritage, great earnings per share growth. Everything's green, some volume came in. You could look at almost any of these and see something that to like. And MDC, again, almost a double. Here's a 50% up since June. Great earnings per share growth. So I could go through every one of these. They all look the same. Some are tighter than the others. They're all getting high to the top of the high jump bar and could be expected to pull back or go sideways. But right now, there's no question that home builders remain leaders of this market as we are sitting. Let's go back. Biotech, I'm a fan of biotech, and Ghilardi and I follow this very closely. Biotech's been a leader. As I look through this, there's a question about Peregrine on the board. I'll take a look at that. We'll look at several of these. Some of these have been big winners for quite some time. Probably my favorite in the group perhaps might be Celgene, which we'll get to in a second. Halozyme is junk off the bottom. I don't know much about this stock, but it had a huge 25% move this week. It's a cheap stock, but as you're going to see, it had been in a deep pullback. It spiked up with Force Kahuna after a pocket pivot the day before. Everything turned green. Something's going on here. Might be interesting to check into it. I'd be worried about some resistance here at the 200-day moving average. Don't know much about that one. Gilead worries me only because of its lack of earnings growth. Certainly is a leader, a beautiful chart. Everything is green, multiple pocket pivots, big into HIV and also some emerging drugs in hepatitis C. Peregrine, which I mentioned, I don't know much about this company. It's in a very nice move since July. It's a small tippler, doesn't make any money. So typically in these stocks, it's either they have a licensing agreement or they have some new product and people are starting to speculate about whether or not the product gets approved and what the potential upside is from an earnings perspective. I always like to have some of these in my portfolio because they often are big movers, and but they also have a high risk of failing. And I'll mention some more of those as we go. I don't know any of the specifics about Peregrine, and I don't think that Ghilardi did either, based on how he responded to a note. Vertex has had some nice moves. This is also a leader in the hepatitis C space. And this hepatitis C space is a big opportunity. People that have hepatitis C don't even know they have it. They die often of liver disease or liver cancer. And there's a number of therapies coming out that can actually cure the disease. And so whoever has the best product is potentially going to make a lot of money. And Vertex right now is one of the leaders. Nice steady uptrend here. It had a big gap up on some positive news, actually in cystic fibrosis, slowly pulled back, moving again. Certainly a leader. As I go down here, as I mentioned, Affymax was on the board. I own the stock. I've owned it since it's been about $5. This was one of those flyers that I owned. It got a nice approval. Look at a monthly, you can see that I've been in it for a while. But this is, you own these things for this event right here, when a drug gets approved, and it's had a nice run. Probably too late to be in this. And then the one that I would be looking at if I wanted to get in is probably Celgene. And if you can look at Celgene, you can see a stock that has pulled back dramatically. But really, since it pulled back, and this was a day I actually put a post to take a look at the stock, it's had a very nice run right back up to almost where it came from. It's got good earnings per share. It trades at a multiple below its earnings per share rate. Doesn't pay a dividend, which is too bad. Probably getting to be too expensive for a buyout, but probably not. Has a nice portfolio of cancer drugs and has a RA, a rheumatoid arthritis drug, that's emerging. Back. Gold, we've mentioned it already. You pick your poison. The one that I've been holding is Allied Nevada, and as you can see here, it had a pretty spectacular run with this pull-up in the marketplace. I like to buy things that are above their 200-day moving average, and as you can see, it popped up, sort of retested, pocket pivot, and ran, and that would have been my buy point back there. Other things up on the list, Randolph's an expensive one, but a similar pattern at a just higher volume, and you could see pull back, pocket pivot, moving again, but at the top of the high jump, not a big surprise as the sector is up there as well, or at least the ETF was. Same thing with Royal Gold, similar pattern. A lot of the other golds, like American Barracks, they've had nice moves, but they started below the 200-day moving average and are just getting above that. Obviously, a similar pattern. If you look at this on a weekly, you'll see that this is a stock that had fallen pretty hard to get down to below that 200-day moving average. But definitely there's been a change in the pattern of gold, and it will be continue to be somewhat dependent, I believe, on what the dollar does, what QE3, what the Europeans do with the euro, and some of the craziness in Europe. That's right. Enough of gold. This is what I do with my analysis. I go back and forth. Wireless telecommunications, not a sector that I've done well with over the years. I did get my iPhone 5 this week, so I'm pretty excited. My wife actually surprised me and waited in line. Sprint Nextel, hard for me to get excited here, certainly is a nice shallow cup. I don't know if this is a little short to be a handle, but pocket pivots probably going up in the enthusiasm for the iPhone. I'm not a big fan of this group. Let me see if there's anything here that pops up to me. Yeah, I don't like any of those. There's probably a point to buying these stocks. Some of them pay dividends. I just don't know these very well. Some of the screens that I did this week, some of the regional banks look good. One that I've been in and out of and looks interesting again is Texas Capital Bank shares. Some of these stocks have had some pretty phenomenal moves, and you could see this is the kind of pattern that one likes to see over a long period of time, a lower left, upper right, extremely tight pocket pivots. Everything is green. Good earnings per share coming in next quarter. Does not pay a dividend, pays at a multiple of 18. So perhaps slowing growth would be worrisome. Beautiful pattern. You trade the chart because the chart usually reflects things that are not in the fundamentals. And to me, that still looks very attractive. Let me see if there's anything else that I looked at in this list, though. Western Alliance also looked good this weekend. Not as obvious as TCBI, but great earnings per share growth. Also does not pay a dividend. A little bit higher multiple. Small bank, $800 million bank, but interesting looking chart pattern. Nowhere close to the high jump bar. All right, continuing on, what else looks interesting here? Back. Oil glass exploration up near the top. They've been on a number of the last couple of weeks, maybe some switching around on what's up there. Oil looked to me like it might be pulling back some this week. But I always wonder, do these earnings per share factor in oil at above $90 per gallon, or barrel rather, instead of 90 per gallon, imagine that. Pulling back here below the fifth, not sure I really find that chart too attractive or much to say about that. Concho Resources broke above the 200-day moving average. This is what I like to see. I like to see the pullback, hold at the 200, pocket pivot taking off from there. Everything is green. I don't like the earnings per share growth. I do like the chart pattern, something to keep an eye on. Don't know this one. There's a smaller, not that small. Again, same pattern, pull back to the 200. Just maybe trying to go again. Similar pattern on Whiting. So a lot here is obviously going to depend on the price of oil, but pulling back to the 200, bouncing up, could be setting up to run again if oil holds. Whiting had some discussion about potential takeouts as well. All right, let's go back and let's look at things that are not doing so well. So if I go to the force index down, here's the things that are doing poorly. And steel, railroads we'll look at, coal, and semiconductors. So a lot of these were in the am I or am I not in the I-5, and those that are not are probably going to get tanked. Those that are will be in it, and I believe Skyworks was told, people found that they were not in the I-5, and you can see a pretty hard sell-off coming in Thursday or Friday. You can see why this is weak. I don't know how you could short that at this point. It's already had a pretty dramatic drop. First Solar, we talked about it last week. I said I wouldn't buy it because of the second name, Solar. Also was concerned that it might run up to the 200-day moving average and turn around, which it did, up to 200 and coming back down. Not very attractive. Cirrus Logic, which was a leader, looking like it might want to come down and visit the 50-day moving average. So what I would do with this stock, which has been a leader, is I'll put it on a watch list and see if I can get it to come down to this 50, and then maybe buy it if it comes down and bounces. That's when I like to get into these stocks. Ian calls it free parking. You can see why it comes down, doesn't drop much below it, or bounces off and takes off again. So not much exciting there. Let's go back. Let's take a look at steel. Steel had a tough week. Cliffs Natural had a huge week the week before, and I bet it's pulled back considerably, as you can see. Big run up, here it is, big run up here got above the 50, and now it's lingering on the 50, and at least in a pullback with the short-term force going negative, a lot of volume on a negative day. Certainly doesn't look very optimistic for that. Let's take a look at U.S. Steel. Had a bunch of upgrades when it had a big run-up, and it's turned around as well. So steel's going the wrong way. Coal looks a lot like steel, and these had a quick pop when China said they were going to spend and they were going to upgrade some of their infrastructure. So steel, construction, coal all went up, and you could see they've all got the same pattern where they ran up and then here's a shooting star, and it's come back down. Now, it might be interesting. It could be bouncing off the 50-day. Anything here that looks interesting? Take a look at Arch. I mean, one thing you should notice by how I do this is that if you didn't think the sector matters, do you notice that when you look at gold, when you look at home builders, when you look at oil exploration, when you look at steel, when you look at coal, that everything you look at, the charts look the same? It's because the sector is driving what the individual stocks do. The index is probably driving the whole market and driving the sector, but there is no question that the sector matters, and it controls much of what your stock performance is like. All right, so we've identified a couple of things. I'll go back to the force index up, and then I'm going to jump into some other things that I do as part of my analysis. Home builders, biotech, gold, banks, and you can look at things below here. All right, so one of the things that I've been doing is sort of should have done this earlier in this broadcast, was that I have my leaders index, which I built so that it could tell me when the market was going to turn. So let's take a quick look at that, and then I'm going to jump into some of the shortcuts. So in my leaders index, this was my Labor Day index that I put together as an early warning signal of when the market pulls. So if I had questions of whether or not I thought this market was still alive or not, I would go and find that index, take a look at it. And what do I see here is that the index, first of all, the high jump has come back, so there's certainly is an opportunity for this to run again. I'm still above the 17-day. Almost since I made the index, there's been a pullback on the daily bongo, intermittent pullbacks on the 2-day force, but has not broken. So if I want to be long, I still have plenty of reason to be long. I'm just very cautious as to the overall status of the market. So a couple of things that I do in addition to the top-down that I've done to find stocks to buy. And I'll go back to my page here. Let's talk a little bit about the GIF. The group inclusion function is what I do is I say, all right, I have groups, these smart groups get updated every day, and I know that they have the best stocks in it. So if I find what stocks are in the majority of the good smart groups that I like, then I might be able to have a shortcut to find the best stocks in the market. So I go to Tools, Group Inclusion Report, Clear, open up Smart Groups, HSI Strategy. So I like Pocket Pivots. And then I like, say, Best Criteria, ERG 240, Growth, HGS 100 Leaders, Quarterly EPS Acceleration, and Relative Strength and Strong EPS near 42-week high. I'm going to make a group from here. I'm just going to call it GIF 9.23 Web Gems. We'll steal the ESPN thing. And I only will care about the 10 stocks. So basically the hypothesis here is if a stock is good, it gets in a list. And if you're in a lot of lists, you must be better than one that's in only 1 or 2 lists. So let's see if there's anything that sticks in a lot of lists. So we're going to call this Web Gems. And so a couple things are going to happen. No index. First, I'm going to open up a list here. We're going to look at these stocks real quick, and you'll see that several of them may have been things we've already mentioned before. And I printed a HTML file that has all the stocks in it, and you can see some are in 6 lists, 5 lists, 4 lists. And then I created a group here which has the top, actually 9 made it, because below that must have been a big drop-off. So one thing you might want to do is now open this up. Now let's just take a quick look at these. Actually, when I look at stocks, I actually changed my view to scorecard no index, because that allows me to get a balanced fundamental and technical. So Alexion is probably the horse of the biotech sector. It's a horse that's been running a long time. It's an expensive stock. It has slowing growth rate and trades at a multiple that is multiple times, 3 times its growth rate. That said, it is a leader, and if you look at it on a weekly, you can see what a leader really looks like over time. And this has been the leader of the biotech. I get the sense its growth is slowing down and its stock price is slowing down, but great management, great company, and they continue to find more uses for their single drug with the potential pipeline they're building as well. Pulte, home. So we already talked about home builders are strong. Lennar, home builders, already talked about home builders are strong. MDC Holdings, home builders are strong. Are we seeing a pattern here? Meritage, home builders are strong. Hanover Capital Mortgage, don't know anything about this. Not a big stock, but it's had a big revenue run. It makes money. It's going to have a hiccup here, but then a big growth 2 quarters out. Concerned that it's at the top of its high jump bars, so I might want to wait and see if I can buy it back at the 17. You notice the moving averages provided support, and if I could get it back down here, I might be kind of excited. No dividend, trades at a multiple of 27, and as I said, it's had some really nice growth rate. Don't know anything about the company, but it makes the list. Ellie Mae, this has been a sort of a tough one with a couple of deep pullbacks. Earnings per share growth going to hit a wall, it looks like. Trades at a multiple of 50. I'd be a little bit nervous on this one. However, from a pattern perspective, you've had a shallow cup, handle, and maybe running again. Here's that Texas Capital Bank shares that we looked at. Calumet Specialty Products, I always think of this as a refiner, but petroleum refining. And you could see, here's a stock, I actually own this stock. It had great earnings per share growth, ran up to the top, high jump issues, pulled back down, starting to run again, doesn't have a whole lot of room to run, got some big earnings coming in. I'd be looking at the refiners because, as I said, these guys had pulled back some, as you can see here, whether you look at DK, whether you look at WNR, whether you look at HFC, whether you look at this one, I think refiners are still a place to be in until proven otherwise. And then I guess that's it on the top web gems. So the GIF is a great tool for finding stocks to buy. Go back and see what else I told you to do. Now, one of the things that you can build within HGSI is these things called views. So I'm going to go into all stocks, all securities, and I'm going to take the filter off. And you can see you start with about 9,000 stocks. Well, when I get to the right place, boom, 8,000 stocks, 7835. And right now I have these ranked from top to bottom based upon the scorecard, which is balanced fundamentals and technicals. Now, the other thing I've done is I took my filter off, but I don't buy everything. I only buy stocks of a certain price and volume in. So I'm going to stick on my price and volume here. So that filter here says $5, 150,000, not an index. That takes you down to about 3,000, in this case 2,600 stocks. So this is where I go fishing from, and they're ranked from top to bottom. So all I really had to do was come in, all securities, put my appropriate view on, and this is ranking them from a fundamental perspective, and you'll see a lot of the stocks we looked at, plus some things that are like Trex, which are a takeoff on the home building industry. Although they're not builders, they actually make some of the products that get used, and you can see the nice run it's had, huge earnings per share growth still coming in. Look what the stock has done. Not a giant company, but one that has been a very nice mover over a period of time. So I have a couple of views that I really like. So I'm going to look at two of them. One I got from Dave Ghilardi, and these are all in the program. So sprinters are stocks that are really technically sound. And if you look at, what do you see here? You see that its earnings per share rank, its relative strength rank, and its group rank are predominantly green. The top 20% in those are going to be green. And you could see that the ERG, which is a combination of all three, where 240 is a good number, the vast majority of them are green when it comes to ERG. So very fundamentally strong. Accumulation distribution is all A's and B's. If you look at the bongos, which are those momentum indicators, the daily and the weekly are predominantly green. A few red weeklies. And these have been very good performers. So sprinters to me are a nice place to look. And again, the cream comes to the top no matter what you do. So using sprinters, using GIF, I get Randgold, I get KB Home, Lennar, Pulte, MDC, Hanover Mortgage. I showed you Allied Nevada. Alchemies, I missed this run because this came up on one of my reviews. And this is a pharma stock, pulled back to the 50. Pocket pivot, big up day in a kahuna and running. And I should have bought that one. Great earnings per share growth. Certainly a nice looking company right there. More of a housing, there's Alexion, more housing. So as you can see, this is a simple way of finding the cream of the crop. Another thing I like is that Robert Minkowski had a filter or a view that he put on the board some time ago, and I found a lot of great stocks using this. Now a couple of things here are things that have pulled back, and I'm a big fan of pullbacks, so let's take a look at a couple of them. Seagate Technology ran up here to about 35, pulled back down to 28. Looks like it might be running again, getting above the 50-day moving average, had a positive pocket pivot, good earnings per share growth, trades at a much smaller multiple of 4.6, pays a huge dividend of 4.1. Might be early where the momentum indicators are still red, but this is a stock that I'm interested in its same class as Western Digital, which has a very similar pattern. Another nice pullback is Flowtech. As you can see, it ran up here, pulled back not as much, but looks like it might be getting ready to run again with a pocket pivot after a gap up from a doji or a kicker signal on Friday. That looks pretty interesting. Mellanox is something that had pulled back over the last couple of weeks and off the 50, gapped up on Friday, great earnings per share. Be curious when this guy's earnings comes out because it pops on earnings. As this, people discount the numbers as you get further away from the last earnings report. And it's sitting in a nice place to buy. July 18th at the market, so it already has earnings out August. So you're good to October, so good for another month on that stock before earnings come out. But that's an interesting pullback as well. We had talked on the board a lot about Francesca's. This is a young in its life cycle retailer. It had a deep pullback on a concern about earnings. It might be getting interesting to look at from a buy. I'd like to see some of the momentum indicators turn green. Also like to see it get above its 50-day moving average before I got interested in it. But it's getting close, something that I'd keep an eye on as well. So again, the point of this was not just to say a few words about stocks. As you develop your favorite views and you use these to find the top stocks based upon your specific requirements. And then another one that I like a lot is Ian's point score. And these are all built into the program. And if you look here, and I just go, you can see Ron made the comments about the oil gas refining. You got several refiners here. Tesoro's been a huge leader. Should have mentioned that one the other day. Bad on me. And you can see what a leader looks like. Big move up, basing now for quite some time. Good earnings per share, at least in the second quarter. Most of the indicators are green. Certainly has been a leader in this group. As I said, you might want to look at something like Western Refining, as we'll show you right here. And you can see a nice pullback to the 50, running again. Stumbles this quarter on earnings growth, but big earnings growth coming in as we go forward. So this is another one of my favorites, is Western Refining. So a lot of neat stocks on that view as well. See if there's anything else that I want to cover. Let me go back to my thing here. Magenta Trader. So on my YouTube site is a joint webinar I did with Derek Pilger of Magenta Trader. Right now, I think to me, it's become one of the most important parts of my analysis. And I'm a big fan of seasonals, and I think of the programs out there, Magenta is the best. So let me just take a look at it, and let's test some of those web gems. Now, just because, these are the 9, a stock doesn't fit from a seasonal perspective. Sorry about that. Does not override my interest in the stock. But if I find something where the seasonals are setting up, as well as the charts, then I'm actually even more excited. So I'm just going to show you how I use this very quickly. There are ways to screen in here. Maybe on my next webinar, I'm going to start with some screening. But let's just take a look at a couple of these. I apologize for the noise here. I may even have to kill this before too long because the dogs are starting to get rambunctious. I'm babysitting dogs today. So let's look at a couple. Look at Ellie, and let's look at a 1R and see. So I type it in here, E-L-L-I. Ellie may be too young. Too young, doesn't have much history. L-E-N. So what I see here, not going to cooperate today, are you? Try it again. All right, well, I may not be meant to be to do this. I'm not on my internet. One of the other ones. Let's look at, PHM and CLMT, and then I want to say good night. PHM. All right. So if, all these home builders look good, one of the things that was concerning was they were at the top of their channels, as you can see certainly here, and that they were at the high jump bar. So at least the way I use my seasonal analysis is I want to find the period of time. Here's today, and this is matched up week 1, week 2 of the year, and basically here's what the price has done in its channel. Here's the projected price changes based upon a 5- and 10-year seasonality. And what I want to see is a stock that's going to have a nice green patch here where I'm going into a period of uptrend. So here's a period of time. Let me open up my data window. Where in Pulte, for example, between October 4 and 17, it has been down 60% of the time and down as much as 8.29%. So I'm probably going to be very nervous about jumping into Pulte. It's at the top of its channel. Talked about the high jump bar being there, and we're going into a seasonally weak time. Let's look at a couple of the refiners real quick and see if we can see anything interesting here. Again, a similar pattern at the top of their channel, and going into at least a seasonally weak period of time, sort of 50-50 up and down, but as much as 8.46% down. doesn't look too good. Let's look at Western Refining. So here's what you really want to find. You want to find a stock that is going into a period of strength with a big percentage move up over historical perspective. So if you look back here, which is starting in January through February, you got back-to-back 10% gain between January 29th and February 11th. Between the 13 and 26, 5 out of 7 years positive, up 6%. The first one actually has more years that were negative despite a big move here. So I want to find stocks that are going to match up here. Now, I'm not trying to confuse everybody. I think I probably did, and I'm not the best at this. There are ways to scan using Magenta Trader to find the stocks that are about to go up based upon seasonals. What I've done here is taken my analysis from fundamentals and technicals and looking at charts and tried to find stocks from that perspective. And then as I looked at the seasonals have been weak. What that means is it makes me a little bit more reluctant to buy a stock if the seasonals are weak. It doesn't make it impossible. Here's another one with weak seasonals, is Jazz. So on that note, I'm going to say goodbye. Probably should have opened up the Magenta Trader. Next time I'll start with it and start from a scanning perspective and look the other way around. Thanks to everybody for joining. We'll probably continue to do these until I see people don't watch them. As long as people watch them, I'll continue to do them. So everybody have a great week. Thanks, everybody. And please consider coming to the PV meeting, Palos Verdes. You'll find it to be a great opportunity and something that you will wish you'd been to more. Thanks.